How's it going, everyone? It's Sam. I want to talk to you about my top three stocks. Now, I'll apologize for the drawing here, it's pretty rough, but I want to go over this because there's been so much fear in the market over the last 2 months, really, and I want to tell you kind of what I've been doing and the stocks I feel very strongly about and why I feel so strongly. I'll tell you what percentage of my portfolio is in them, and to be fair, I am very risk averse in certain ways. I really like to diversify. I guess I am okay with riskier stocks, but I do like to diversify. But I'll give you the exact percentage of each stock that I hold, and you guys can make your own conclusions in the end whether I am crazy investing in these stocks or whether I make a lot of sense and it makes sense what I'm doing. Now, if you guys don't mind, we're going to walk through this. Please let me know that you guys like this by hitting the like button. I've been making a lot of cryptocurrency videos and I really like those, but I also want to do some stock videos. So if you guys hit the like button, it does help. Also, there is a link down there to Webull. I know a lot of people have actually been signing up for Webull over the last couple of days. You should definitely check that out if you're interested. They allow you to trade before the market opens and after it closes. We know that flexibility in when you can actually buy stocks is really important because we had a flash crash in the morning last week, and there were a lot of deals. So if you guys want that, that is down below. There's also a link down there to Patreon. So if you guys want to see exactly what I'm buying and selling and get like what's happening in the market when it opens and when it closes every single day, I post that there. I tell people what I'm seeing, and we go through some different stocks and some big news and stuff like that. So definitely check that out if you're interested. Now, the first stock on this list is Tattooed Chef. Now, I have 6.6% of my portfolio in Tattooed Chef. It's definitely come down a lot, right? I've been building up these three positions really over in this area here. Just over the last couple months, I've been adding a lot to them. I had some shares of Tattooed Chef back in November and December, and then I've added to it a lot more heavily recently because we've seen some great pricing. Many of these stocks are beaten down, and they actually have had really good news, really good results. All three of these stocks are blowing out expectations, but they're still down significantly from their highs. We see here we are up at $27, and then now we are down about 26%. Down to the bottom, we are down about 40%. Now, this is a $1.6 billion company. All that I own in this is shares. I don't have any call options. I would love to add some if they fall down to some of the levels that we've seen. Just over the last quarter, the revenue was about $53 million. Now, this was a huge increase of 59% compared to the year before. Now, this is a company that I think is in a growing space, right? The plant-based food space. I think overall it is healthier. I've tried 6, if not 7 other products now, and I'd say 5 or 6 of them I would eat. Like, I'd be happy, I'd be excited when I'm hungry to eat them. So their products are good. They sell at a pretty nice rate. They always sell through. They have a very high sell-through rate. I can barely ever get a hold of them. And they're $5 a pop just for a bowl, for like a half-pound bowl. So pretty good pricing there for the company. Now, they're starting to introduce new products. They have these family-style bowls, and then they also have family style packages where you get 4 of them, and then they have family style vegetables too, where you get like a bag of vegetables to cook. Now, they're growing really quickly, right? 60% growth. The majority of this is from their own branded products, which, if you don't know about Tattooed Chef, they've been in business a long time. They have been around a long time, and they are really good at what they do. They did labeling for other companies before, where they would actually make the product and then the other company would label it with their own label, and then they would be the ones that were actually producing it. But now they have the Tattooed Chef brand. So they had gross profit of about $14 million this last 3 quarters. Now, what gets interesting is they just acquired 2 new factories, and they acquired them for $35 million, I want to say, and they are expecting to get $200 million worth of revenue out of them, annual revenue, in the next couple of years. So we were being able to pick something up at like a 1/6 price to sales ratio for that factory, which is going to be really interesting. It brings them into the Mexican food space, and after eating their foods, the best foods that they had were the Mexican style foods. They were really good. Now, overall, they are in a very strong position. Again, they have a $1.6 billion market cap, but if we just look here at their cash, They have about $185 million worth of cash, total current assets $267 million. Now, they do have some current liabilities, but it's only about $41 million. So overall, they're in a very strong cash position. They're growing 60% a year. If you compare them to Beyond Meat, our very good food company, they are trading at a severe discount. They are expecting to continuously grow revenues very quickly. And I really like their products. So they have a strong balance sheet, they have a good product, and they're growing very quickly. I don't see this as a very risky stock. I know that's a growth stock technically, but food stocks in general aren't generally considered growth stocks. The thing is, though, it is early stages. So who knows, 5-10 years from now, once they branch out into other foods too, because we're just looking at freezer foods right now. Once they get into snacks and into maybe meals at different restaurants and stuff like that, because they do have high quality food. Like, it tastes really good. So I can't imagine how good it would be if it was actually prepared by a chef and not like all frozen all the time. So if we start to get into that space and we're a $5-10 billion company, people won't look at this as a growth stock. This will be like a dividend king or something like that years down the line. This will be something that is steady. And right now at a $1.6 billion market cap, I think it does offer an interesting buying in price. Now, of course, we did have prices that were more attractive, right? We have jumped up a lot over the last couple of days. We were down just on the 5-day, I want to say we were down pretty significantly. We were in the 17, 16 range. And if we look at the 1 month, we were even further down than that a little while ago. So we were in the low 16s. I think we even hit 15 something one day. So really attractive. I'm not picking up more shares at this moment because I really like picking them up when they're in the $17, $16 range. But if you want to buy them now, I think over the long term, it would be a good price to buy them. I've heard many people think that this is going up to, 3 figures over the next 5-10 years. So 5x from here. Now, the next stock that we have to take a look at is Palantir. Now, again, this is another stock that I just own shares of. I don't own call options, but I would be interested in that if the company falls down again. It's sitting at $20. It was one that was a retail favorite. I think I think most investors actually added more on the last couple dips, but I think there was institutional money because it was at almost a $75 billion market cap. So I'm guessing a lot of institutions have dumped it. Now, it has come down a good amount, about 46% till now and 52% overall. This is a really interesting company that a lot of people still don't understand. So it's information, AI, it is data analytics. It's a company that is growing quite quickly. So it's growing revenues very significantly. We can see here $341 million in the last quarter compared to $230 million in the quarter the year before. Look at the cost of revenues. So they spent another $10 million for the cost of revenues, and their gross profit went up $102 million. So they put $10 million more into it. Their gross profit went up 102. Again, they're growing really quickly. They have significant expenses right now. They're not profitable right now, but that is on purpose. Look at the sales and marketing, $136 million. Do you think they would need this much sales and marketing if they were just catering to their current clients? No, they could be much more profitable if they wanted to be. Research and development, they're increasing this too. They're $98 million a quarter right now. So overall, they aren't very profitable because they are investing in themselves very much. But take a look at their gross profit. So the gross profit margin went up from 72% the year before up to 78%. Their free cash flow is beautiful. It's very high compared to other tech companies. Now, they do have a net loss. A lot of this is due to compensation for the team and for the company, right? $147 million over one quarter. And then we also have all these other operating expenses. But again, this can be dialed down in the future if need be. Now, they are in a very good cash position. They have about $2.33 billion compared to their current liabilities. The current liabilities are only $667 million, so they are at a very good ratio here of about 4. So overall, I think they are in a very strong position. They have a lot of room to run. They're growing very quickly. So they grew revenue at 49%. They are a software company. If you compare them to other companies, right? So we look at Palantir with a 25.6x enterprise value divided by the 2021 revenue. That is high, but if we look at it compared to Snowflake's, which is 50x, or Zscaler, which is 35x, it's not as bad as some other companies in the space. Now, the third company that I want to put out there is CLSK. 4.4% of my portfolio is in CLSK, but some of those are call options. So I have 2023 $20 strike call options. Now, this one has been beaten down more than these other companies. It is a growth stock to the peak right here. It is growing so quickly. It's blowing out revenue. So 61% down from the peak. What this is a energy company that has gone into Bitcoin mining. Now you might think, oh, this has been hit really hard since January. Something must have gone wrong with it. No, nothing bad has really happened to CLSK besides some fear, uncertainty, and doubt. There was a short seller report. There was fear about CLSK being overvalued. There was a lot going on with CLSK, but overall, the lawsuit seems to be going quite well, actually. They've reported some different things on the website, and it seems like it's going to plan. Now, at this point, it is severely beaten down. That's why I picked up some call options. It was at $14 when I picked up those call options. I picked up more shares also. And right now, the company is sitting at a $525 million market cap. I keep on buying this all the way down from the 20s because it seems like such a deal right now. Of course, you have to believe in Bitcoin and Bitcoin mining and all that. But if you really believe in it, this is, I think, one of the best values out there. So they have been crushing revenue. So they had 3-month revenues of 8.1 million. Now I realize that sounds really like not that much, but this was a $4.4 million increase over the same year comparables. Now, even just last quarter, we had like 2.3 million in revenue. So they're mining Bitcoin, I believe, right around 1.5 to 2 Bitcoin a day right now. They have been acquiring miners, and they will be up to 6 to 9 Bitcoin a day by summer. Let's say Bitcoin recovers, just to make the math easy, and they're sitting around 50,000, and we are able to mine 6 a day by the summer, right? End of summer. That would be $300,000 in revenue a day. It only costs them a small amount. It's only 4 figures to actually mine this, so it doesn't even cost $10,000. It's like $6,000 to $8,000 or so to mine these per Bitcoin. So we are at huge profitability. We were profitable last quarter for the first quarter. Now, over the coming months, we will ramp up this Bitcoin mining. So 300K a day, that over the year is pretty significant, right? That's over 100 million throughout the year. And that would be a 10x increase over last year's revenue. Again, very profitable too. Now, they are planning on 3xing this. So they're expecting to get up to 18 Bitcoin a day by some extra miners that they've been buying by next year. They also think that, by that time too, they will be able to license out some of their software. They are able to mine Bitcoin very clean, which is really important over the last couple weeks with all the fear, uncertainty, and doubt about all the coal mining, right? All the issues with clean Bitcoin mining. And they are at 95% carbon free, moving up to 98% carbon free. So they will be in a league of their own in that way. Now, overall, they have a great balance sheet, 157 million. So essentially 30% of their market cap is just cash. It's beautiful. And they're already profitable too. They have Bitcoin on their balance sheet too. So we have digital currency of $5.7 million worth of Bitcoin. Total current assets, 178.5 million. They are holding on to the majority of their Bitcoin. Over time, you can see that they have produced more than 144 and an aggregate of 241 Bitcoin, and they are holding 115. So they are holding a decent amount of their Bitcoin, just under 50%. Now, their current liabilities, $7.3 million. Total liabilities, $9 million. Their cash position is amazing right now. For a profitable company, it's unbelievable. Now, again, like I said, they're going to continue to grow. The risk with this one is if for some reason that short seller report comes out, it came out months ago. I think most of it has blown over. But let's say they really did do some shady things, and it causes the company to get sued, and then they lose a lot of money. They lose their cash position. Maybe they lied about all the stuff that they've been talking about. Then I could see it being a problem. But I find that very hard to believe all that will happen. I think that what they've done is great. I think they're really increasing revenues pretty quickly, and that is why I have been buying more of them. Great cash position, great growth. I'm bullish on just crypto in general. Of course, that's another risk factor we should hit on, is if Bitcoin all of a sudden goes down to $20,000 and stays there, that could be bad for CleanSpark. Now, they would still be able to make money off of mining that, but it would really decrease the share price. Although we go in cycles, so a lot of people would think, okay, now in a couple of years, Bitcoin will go back up. So in that case, we might be able to pick up some awesome deals if you're still bullish on crypto. So overall, these are the three companies I have the highest holdings in. And I realize some of these don't sound like that much, right? Like 6.6% in my top holding. Thing is, I do have some index funds in there too. So 20% of my portfolio or 25% are index funds. I use that kind of as gunpowder for when we have these corrections, and I sell part of my index funds to buy some of these great stocks at a discount. So a lot of these stocks I was able to pick up when they were 20% down from here, or even more down from here. So you have to take that into account too, that again, 20% of my portfolio is index funds, and I would say these percentages here don't include my crypto. So this is of my stock portfolio at 6.6%. So overall, I think I would be happy to buy more of these if they dip more. I do have some cash, but I wanted to keep some cash too in case things got worse. So I did pick up some. I think I pretty much doubled my position in all of these over the last month or so. So I was happy to pick up more of them. But let me know your thoughts below. Let me know what stocks I should be including in the top 3 positions of my portfolio. Maybe let me know what stock you would kick out and what stock you would put in if you have some strong opinions on that. Thank you guys so much. Thank you for checking out the link down below to Webull and BlockFi. If you want interest rate on your cryptocurrency, they're also paying a bonus. They also let you get loans from them too. So in case crypto goes up significantly and you actually want to access your funds without selling them and taking the tax hit, you can definitely check out that link down below. So thank you guys, and I will see you in the next video. Bye.